Welcome to XM.com for the Daily Market Comment by Mario Sachkiriakos. I'm Christina Marujos. The war in Ukraine has unleashed havoc on financial markets, with some of the most liquid securities on earth trading like penny stocks lately, as nervous traders scramble to either hedge their risk exposure or liquidate assets. Oil prices are the perfect encapsulation of this paradigm shift. The crushing sanctions imposed on Russia have left energy traders desperate to secure as much supply as possible before the shortage intensifies, which sparked a rally of epic proportions. Oil prices have gained 20% this week alone. This is the second time in recent months that releasing strategic reserves has backfired by propelling oil prices higher. The underlying message is that traders want to see permanent supply increases. OPEC Plus will meet today. So far, there has been no indication the producers are willing to raise output faster, but that was before prices exploded 20% higher in 2 trading sessions. That said, Russia is also part of this alliance, which complicates matters further by adding a geopolitical dimension to the negotiations. If OPEC Plus doesn't step up its game, energy prices could keep grinding higher. The rotation towards safety was evident in every market. Portfolio managers are loading their books with defensive assets, buying truckloads of government bonds and gold to weather out this storm. Bond markets experienced some of the most violent moves in years, with yields falling dramatically as some leveraged funds apparently threw in the towel on bets for aggressive central bank normalization. With inflation expectations soaring but Fed bets being dialed back, the result is that real yields have imploded, which is the perfect recipe for a rally in gold. This allowed bullion to charge higher yesterday in defiance of the stronger US dollar before it encountered resistance near the $1,950 an ounce region. In the FX space, this crisis has been a perfect storm for euro-dollar, which sliced lower today to resume its broader downtrend. Demand for the reserve currency has gone through the roof as investors prioritize protection over everything else, something also evident in the Japanese yen and Swiss franc. Meanwhile, the euro has been left to drown amid fears that the sanctions will inflict serious damage on the European economy. As for today, there's a ton of crucial events. Ukraine and Russia are expected to make another attempt at a ceasefire. In Canada, the central bank will meet and money markets imply an 80% chance for a rate hike. But perhaps most importantly, Fed Chairman Powell will testify before Congress. Thank you for watching the Daily Market Comment here at XM.com.